Um, so, good afternoon, all 15 of you that have managed to hold off your pangs of hunger.
I brought most of them here, actually.
Yeah, we're most certainly grateful, and hopefully that'll make it a less stressful and more relaxed fireside chat. My name is Manmeet Singh. I am the CFO and CIO of Emergo, which is the commercial and venture arm of the Cardano project. So on the panel, I'll give you a quick intro to our panelists, and then we'll jump straight into the questions and the ensuing dialogues. So on my left here, we have Sheikh Mohammed Irfan. Irfan is the VP of Global Operations and Affairs at Blockcelerate VC, which is a blockchain fund and an accelerator looking to invest about 50 to 100 companies over the next 5 years. Prior to his role in Blockcelerate, he's been involved in technology strategy, policy research, and development with governments, Fortune 500s, among others. He's an early investor and adopter of blockchain technology. In his current role as the VP of Global Operations and Affairs, he engages with governments, academic institutions, communities, etc. Next to him, we have my good friend David Drake. David is the founder and chairman of LDJ Capital, a multifamily office which deals in worldwide funds accessing trillions in assets and maintains over 50-plus global directors and family offices as partners. He's a prolific investor in the space. He's been involved in TMT, realty, hospitality, clean tech, energy, and social impact investments for over 20 years. And he's also an author and has co-authored the book Planet Entrepreneur. Thank you, sir. And is the author of upcoming books, The Crowdfunding Economy and Life Instructions for Entrepreneurs and Executives. Next to David, we have Dr. Marwan Al-Zaruni. Dr. Al-Zaruni is not only the CEO of Dubai Blockchain Center, but also the Director of Information Services at Dubai Electronic Security Center. Before establishing the Blockchain Center, he was an early crypto investor who started Bitcoin mining in early 2013. He's also created Dubai's first crypto payment processing and blockchain software development company in 2014. And more recently, in Feb 2018, he launched OTC Supply DMCC, the region's first fully licensed OTC crypto commodity trading entity. His latest venture is co-founding Quanterium. And as a good friend of mine put it, he's an OG in the blockchain space. I'm looking forward to that. And then next to him, we have Mr. Abdul Rahman Al-Olayan. He is the co-founder and CEO of Taiba Valley, which is the investment arm of Taiba University. We had a chat the other day, and they're working on some very interesting research projects in blockchain, IoT, and AI. They run a lab that conducts the R&D and also training sessions. He is also an educator and is assistant professor at Taiba University and founder and CEO of Arabian Organization for Training and Development. And at the far end there, I have another good friend of mine, Ibrahim Al-Kurd. Ibrahim is the founder and CEO of Newmine, which is the UK's leading cryptocurrency mining company. Newmine has sold its mining hardware to customers across 3 continents and has extensive mining operations across the US and Canada. He's also the founding partner and president of Lavalier Capital Management, a crypto-focused hedge fund. Gentlemen, welcome all of you. Thank you for being here. So I'll just jump straight into the questions. First question to Abdul Rahman. So will there be increased investments in startups in 2019? Sort of where and how do you see this playing out? And taking on the topic of our panel today, what will it take for institutional investors to come in, and do you see them differing or being different in their way of approach to the industry compared to individual investors?
Thank you, Manmeet. Thank you for the 15 members that holding before lunch. Investing in blockchain investing in any market needs a mature market. And most of application in blockchain, at least in the one that we, other than fintech, it's BOCs, and very limited applications that goes beyond the BOCs, and I think there is more BOCs and research will be on 2019, but until the until more until these BOCs goes to the next stage, will then it will we may see more investment come to in Saudi Arabia. The BIF, they establish theses for emerging technologies, and one the technology that they are looking at, it's blockchain, and so the fund is there, but the opportunity to fund in or to invest in, it's very limited.
So do you think this year is the year when we actually start seeing some results of these POCs, and we can now?
I doubt it in 2019, but maybe beyond that.
Maybe beyond that. All right. Irfan, when it comes to blockchain investment, what kind of companies are you looking at? I know you're looking at a lot of accelerator type models. You're looking at early stage ventures. So it's interesting to sort of understand from an early stage investor perspective, what are the kind of entities that you're looking at and what that focus would be. And also, in regards to the MENA region, is there some specific industries or sectors that you think are interesting?
Thank you, Manmeet. First of all, good afternoon, everyone, and thank you for joining. I want to apologize because I'm still jet lagged, so I hope you understand. That being said, so on the first question is what sort of companies that we're looking to invest. And I think, in a nutshell, if you're thinking about blockchain industry, it's a very nascent industry. It's not a sprint, it's a marathon. So you have to understand the space that it needs its own time. It needs to organically grow. That being said, Blockcelerate is a very research-driven venture fund. So there are three categories of companies that we are investing in: blockchain platforms, blockchain applications, and blockchain ecosystem. So the reason that we are excited in the blockchain space is that what we feel is there are certain inflection point of innovation. And we've seen that over the course of time through the industrial revolution, the steam engines, and transform and create an economic impact. So we think blockchain is also one of those inflection points within our innovation within our civilization, and that's what's it's going to happen. So I think that there are a lot of interesting companies, but we need to give them time. And we have seen a lot of flops also, and one of them would be, as we have seen in some big names going in too early and wanting results very quickly. So it's important that we understand this space. So in regards to MENA, of course, MENA is a very interesting space, especially because A, it's an emerging market. B, is that it's one of the two regions actually in the world, like Latin America, which has like similar language within the entire region. So it itself, and also the culture itself, and it has a very interesting market scenario. Of course, when everyone talks about MENA, everyone talks about the commodity industry or the energy industry. I do think that there are other industries that could potentially make larger impact, things like the Islamic market. That's a $2 billion market and it's still growing. And with the usage of blockchain, there are a lot of interesting new opportunities that can be explored, especially with Sharia compliant systems. Thank you.
Okay, interesting. Ibrahim. So let me change tacks a little bit here. So you run the hedge fund as well as the mining business. You're a lot more involved in sort of trading activity, in addition to your investments, but also a lot in the trading. So, what are your thoughts about all these crypto price predictions and the people who continually keep making these predictions, especially now that we're in this protracted supposed bear market, et cetera, et cetera. What are your thoughts on that? And can anyone really predict what these crypto prices are going to be at any point in time?
Yeah. So it's very difficult to predict any market, whether it's the stock market or futures, etc. And crypto is on another level to that. It's incredibly difficult to see where the market's going to move. You get a lot of people throwing price predictions about it's going to be 20,000, 50,000. John McAfee said it's going to be 1 million. It's just ridiculous numbers being thrown about. The truth of it is that no one really knows. It can go to 100,000, but those predictions out there, you've got to be very cautious of who's giving them, because I just think they're completely untrue. We're a hedge fund. We have lots of market insight. We know a lot of the key players in the space, and we don't really know, how far it's going to go. So I think that's something you've got to be cautious of. We think, the ICO market in general as well. A lot of these coins, if you're going to be putting money into them, be really careful. The SEC has started cracking down on projects. I think STOs is just ICOs covered up. So I think all the retail investors need to be really careful what projects they're putting the money into.
Cool. David, so you've worked a lot with institutional investors and family offices from across the globe. What did it take for them to start investing in this space? And from your experience in that, are there any sort of regional variations? So I know you work with family offices from across Asia, Europe, the U.S., and MENA as well. Do they have a different paradigm that made them come into this space, a different investment thesis that made them come? Any variations around that?
So I think real estate for family office is something they always wanted to fractionalize. You have non-tradable REITs and REITs that people are pursuing. And I think what we're used to in the family office world is gold, diamonds. We're working with gold and diamond owners looking to fractionalize and sell it, because the beauty is you can actually raise money quickly if you have the distribution. So a lot of my own personal investments has been in media and distribution globally. So the family offices, they got into the hype, but nobody really explained to them how it works. And they're still cautious, but I think some of the family offices sitting on these illiquid assets or semi-liquid assets are starting to open up the doors. And they're coming to me as a multifamily office saying, hey, can we liquefy this asset? And real estate is the prime one, because 1/3 of all the family offices made their wealth in real estate. And another third in tech, and then the rest in other areas. So we're starting to see more and more, both in Asia and in North America, coming to us and saying, hey, can you help us with real estate? And of course, the smartest way to do it is refinancing. I'm going to take my Park Avenue commercial building, and I'm going to refinance it myself one day in 2019. Are they jumping in? No, because of the bear market, still cautious. And everybody's waiting for the SEC in the US to come out with direction on how to deal with it. Of course, we just saw a couple of congressmen come out with a suggestion that crypto should be a separate asset class. Should that go through the Senate and the House? I had the luxury of lobbying the SEC in 2011 and the Senate and the House of Representatives for the Jobs Act. At that time, it changed the 33 and 34 Act, allowing us to use advertising in the US. And I think people in the crypto space, especially at this event today, I'm seeing a lot of new faces. More mature industry, more mature way of looking at this industry. And I think as we start understanding that distribution becomes key, you'll be able to get people around the globe to put money into your property. So on the same side, I think the institutions are waiting for custody and other things to be ready. Some institutions got involved, but are still waiting. And they don't have it in their bylaws to be able to invest in a new asset class. So they're putting money into crypto hedge funds, which have been doing, but obviously they didn't perform too well the last year. So I think it's going to be cautious first 6 months this year, and I'm hoping the STOs will take off maybe end of the year with more direction from the U.S. But yes, back to your question. The family's saying, I'm sitting on gold, I'm sitting on diamond, and we're working with, billions of dollars in gold and diamond and real estate.
All right, so they're starting in asset classes that they're comfortable with, that they have experience with. And they're like, all right, here's another means of investing in something that I do understand. Are there any sort of geographical variations in terms of, are there any family offices from a particular region that are more proactive in this decision-making and others who are sort of following on later, or is it pretty much spread globally in your experience?
I have a feeling that the European family offices are more open to this. The Asian ones are not so much, except the new generation may be coming in. But when I went down and spoke in Asia a couple of times talking with family office events, they were not as open to it. The European have, a lot of language barriers between the countries. They have to understand different cultures. And we've seen more openness to explore the space.
Okay. Marwan, you've been a prolific investor and sort of personally invested across the space. So what are the trends that you were seeing from institutional blockchain investors in the region, in the UAE and in the region? And in addition to that, are there any individuals or funds that you think are leading the path and opening up the investment platforms here?
Thank you for having us, first of all. I just want to say that I don't really deal a lot with institutional investors. I actually started investing in crypto myself, and I started with mining business. And even with that, I was my customers were actually exchanges that wanted liquidity. So I wasn't really dealing with family offices or institutionalized investors. I was more dealing directly with the exchanges, and then I started dealing with high net worth individuals as well who wanted to get into crypto but couldn't buy liquidity from the exchanges in the volumes that they wanted. They were early investors and they were interested in getting into the space, but they were very forward-looking and very enthusiastic about blockchain. And this was in 2013, 2014. And then I started doing consumer-based products. I started with ATMs here in Dubai, and that still is going on. But it was targeting individuals. But I noticed that there were not a lot of people that were, understood what crypto is and that kind of stuff. So what I started doing is I started doing classes about what is crypto technology, what are the different coins. At that time, there was only Bitcoin, and Ethereum was just about to start. And I started doing that, and then after that, people were interested in ICOs just before the ICO craze, and I started doing classes about ICOs, and then we started getting into the space of private pre-sales and things like that. And for that, it had to be a lot of, getting to know people and getting to know projects, and a lot of long hours of video conferencing with these projects to advise my investors here in Dubai on what are the best projects. And we were choosing only the cream of the crop. We were not investing blindly in projects. A lot of the times, what I saw investors were doing in this ICO craze phase was actually waiting for the ICO to launch and waiting for the dip and then buying at the dip, which was very beneficial. It could be the same day, actually, the ICO was launched. And this was the strategy that we were advising people to do. And the ICOs that they were not sure whether they should invest in or not. But then more recently, the ICO craze has died down, and people were more interested in actually starting their own projects and actually investing in some of those projects. A lot of the times, they're not sure about the actual project, so what they will do is actually base it on a revenue-based model. They will support the project with some money, but they want to share the revenues or share equity in the project. So instead of doing it the ICO way, they'll do it the traditional way with the seed funding and things like that. But again, they're far and few in between in this region, especially because investors here do not have a lot of visibility or a lot of understanding of blockchain technology. And whenever you throw in the blockchain name in banks, it's very hard to actually open a bank account. To give you an example, for our OTC business, it took us about 6 to 8 months to get the bank account issued after we actually got the license and everything was cleared. And even until today, we have problems with the banking when we deal with high volume of transactions. And they ask us for proof, and we show them the blockchain. They said, what? No, 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 that's not proof. You know, even the banks, we had to do a special session in the blockchain center to the banks to explain the KYC AML that's related to blockchain. We did a session, a 2-day session also for law enforcement. So it is very important to raise the awareness of all the players. The press is very important. It is the main player actually in this space. I remember one of the early, Nick Spanos was in this session last year in February, right after the World Government Summit. We had a session with the press in Area 2071 in Emirates Towers, and the guy didn't understand anything about crypto. And he was the guy heading both the technology and the finance pages on a well-known newspaper without mentioning the name. And he didn't know much about blockchain. And after we explained everything to him, he called me the next day. He's like, I want to invest in Ripple. I was like, yesterday we just explained that it's a centralized thing. You shouldn't invest in these things. And he's like, no, 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 I heard really great things about it. I was like, we talked, yesterday you didn't know anything about crypto, and today, like one day after you want to invest in Ripple, read more about it. Yeah. Educate yourself, invest in your own education. But this is the attitude we get here in investors. They want to jump on it, and this happened especially just before the collapse of the prices or the market. People were investing blindly without really getting the understanding of what crypto is. They just saw something rising in price and just went after it.
I have a question for Dr. Marwan. Aside from fintech, is there examples that are use cases that people invest in or fund invest in, like in healthcare or education?
Yes. Thank you. Very good question. I think he's the panelist. Or the moderator, sorry. What we did actually, when I was doing the blockchain center, I'm still doing that actually. We tried, especially from Ramadan last year, to do specialized sessions about the use cases. So what we do, each session we'd invite 4 different use cases from different industries, and one of them was healthcare. We did actually land department as well as a use case. We did smart Dubai use cases for financial settlements between government departments. We did a lot of other industry and public sector use cases, and we brought on those people to actually do the demos for the blockchain. So people hear about the blockchain, but they don't know the actual, they cannot see and they cannot touch the actual use case, and they cannot see the transactions happening live on the Blockchain Explorer. And we were showing them there. We showed a use case also for gas station, use case for Enoch as well. There was a couple of companies like that were doing that project as well. And we showed everything live to the people, and they were really impressed. And this was the first time, I think, in the region that somebody went and showed use cases live to people and demonstrating the use of blockchain in different sectors. And that's the thing that we ask people to do. You have to show us a live demo of what's happening, or a live project.
So in that case, if you're looking at live, then you need some sort of the company has to be at some sort of an MVP kind of level. So
yes, a lot of them were not actually MVPs. They were live products. A live actual system is running with the web interface.
Running on a customer's business.
Yeah, so okay. the land department is live. You can get a land deed on the blockchain now. EduChain, which was for certificates, is live, is being used by most of the universities and schools here in the UAE. Right. Donor blockchain, they just signed today with Do. I'm actually a co-founder of that. And that's for healthcare, for blood donation, for organ donation. And all these projects are either the code is live and you can do a demo, or it's actually running.
But you invested in them after they were live projects, or you seeded them early on itself?
It depends.
Depends. Okay.
I usually look at the code if it's mature enough. Like you said, maturity is very important. and if there are actually buy-ins into that code. So you have to have not only the code, but you have to have the ecosystem around it. So if you have the buy-in from a ministry or, for example, a local department or something like that, that makes it worth for the investor to invest. And sometimes the investor is actually that same government department that started the project. So it becomes like a private-public partnership, or it becomes a revenue-sharing model.
So this is a question now open to the panel. Feel free to chip in. But you know, in 2016, 2017, when we had this huge ICO craze, and you know, the mantra then was, hey, anybody can be an investor. And indeed, a lot of the folks who bought into the tokens and the ICOs considered themselves almost as if they're VCs, right? A lot of the retail investors, so to speak. In fact, one could even question whether they're actually investors or simply speculators. But they had that sense, and there was this notion that we are now disrupting the entire venture capital industry because now you've crowd-funded this entire industry. You've changed the dynamics of this, you know, on its head. Now, since early last year onwards, as we've gotten into this bear market and these projects have not delivered, a lot of the projects have not delivered the results or anything in many of the cases.
Yeah.
And we're going back now to, hey, forget ICOs, let's move away from utility tokens. It's all about security tokens and STOs and so on, or something in that direction. Are we effectively saying, or do you feel that we're literally going back to traditional financial market systems, just with a tokenized model and a blockchain model? As far as the investment, I'm just talking about, you know, the investment side of things, not the adoption of the technology or anything like that, but purely the investment side. Are we going back to what used to be because that's what works?
Mandamat, I want to address that. So we were involved, I made over a dozen investments with $1 million or more over the last 2 years. And some of the companies we worked with raised between $10 to $80 million. And there's actually 40 of them that we worked with that are just raised the money they needed, and now they're building the tech. They're revenue generating, they're building the tech, and as I speak to all of them, they just say, look, we don't want any press releases, we don't care about the token, we're busy making money and building a business. We have burn rates for a year and a half to get out of Ether, and we're just building it. And those press releases will start coming out in March, April. And these are companies who are doing really well. We're talking about, you know, some of them doing billions in revenue annually. And as that starts coming out, you're going to start seeing these, maybe the new Amazon popping up. And they're holding back because they made their money. They don't need to float the token yet. So that's one portion. Another portion is we have one of the family members have a $100 million fund. They want to invest, and I told them the same story. Yes, we can invest into a company, but if you want equity and you want something to be liquid already and pick it up with some equity, you got 60 to 90 days to make that happen, because as these press releases come out, they're going to get momentum. Now back to your original question, what else are we looking at in Manhattan and Wall Street? We're going back to basics. Existing companies with revenue, governance, active governance, and I think that's what we need to bridge. We need to bridge the crypto madness through active governance, which Wall Street and equity markets have been all about. And as we do that, there will be a place for utility tokens, but the craze we saw, that's over. Well, specifically the retail investors who would buy madly online, that portion is over. But there will still be utility tokens. And should we change the law in the US, then there will be separate law potentially for how this will be addressed.
So is this a space where individual investors should be playing in the first place? I mean, is it wise for them to be doing this?
I don't think so. I mean, what happened was in 2016, 2017, you had some crazy returns being generated for cryptocurrencies. And then a lot of people started putting money into it late 2017, ridiculous amounts of money. And then the returns that they were thinking they were going to get, they didn't. And then we had a lot of dumping of cryptocurrency in 2018 and caused the price to drop massively. You know, one of the things that's keeping the price so low, I believe, is because all these projects that have promised to do all these great things are not really doing much. You know, in terms of the applications of blockchain, we haven't seen that many real-world applications yet. I think we will, but it's going to take a few more years. The only really mass real-world application that we've seen for blockchain so far is cryptocurrency. And, you know, even the cryptocurrencies we have, they still need to be developed. So I think that, you know, when we start seeing these real-world applications, when we start seeing more people understanding what blockchain is and how it works, then we're going to start seeing the growth of the market, and healthier growth than the one we had in, you know, late 2017. So, you know, these are the things to look out for. I do think that, you know, everyone should have some skin in the game because, you know, it could go much further than we anticipate. But, you know, I think we're still a long way off from a lot of those real-world applications coming through, unfortunately.
Okay. Irfan.
Yeah.
Oh, you can
Sorry.
go ahead and
No.
add to. No, go ahead and add to that. No worries. I was
No,
going to ask you another one.
so I think, as you mentioned, that we're definitely not going back to what it was, but I do think that there's a role of both. So as I mentioned that, you know, I was an individual investor myself in the early days, and then when, you know, kind of like blockchain seminars would look like this, very small. So what I'm trying to say is that individual investors do play a role because over the course of time, again, you know, if you look at the evolution map of, you know, people participating in companies and the growth of companies, it has changed. You know, at first, you know, it was a company that was owned by the CEO, and that's where most of the wealth was. And then you saw, you know, in the 90s, the post the dot-com era, you have more people involved within the growth of a company. And then you had the blockchain time and the ICOs, and you had a lot of the communities being involved in building projects. So institutional investors, what they bring in is, of course, experience and, you know, understanding and working with companies for a long time. On the other hand, just like Ibrahim mentioned, that I don't think anyone can understand a market. Because in a lot of cases, you know, no matter how much theses, no matter how many models that we try to simulate, the market is its own thing. It has its own way of behaving. So what I'm trying to say is that if institutional investors play a role, it is also what the startup is looking for. If they're looking, because institutional investors brings in more than investment. They bring in, so sort of like us, like you have the accelerator component where, you know, we definitely help in building that company. Whereas the individual investors also play their role in terms of creating a community which of course, over the course of time is going to make a lot of difference because it is ultimately the community that would be the consumers of that product.
So, are there different metrics or parameters that we should be looking at when investing in blockchain-related projects? I mean, or should we be looking at it in the same manner? Do you look at it in the same manner as a typical VC would? And here I'm talking about more the projects rather than investing in, you know, the cryptocurrencies, so to speak. But do you use similar metrics as any venture capitalist would, or are you looking at it?
And before we answer that,
Yeah.
how about you talk about your fund and how you invest?
We'll get, sure. All right. Thanks for the shameless plug for me here. Yeah, so we focus on Cardano. So Emergo is the venture arm, commercial venture arm for Cardano. So I look at any kind of project that would either drive the adoption of Cardano or drive value to ADA holders, ADA being the token of Cardano. So, you know, we don't work as a fund per se, it's our own balance sheet. And for that one, I look at, you know, is there a really interesting sort of sexy project that I think is really good for our ecosystem, for the Cardano ecosystem, and is it not getting funded for whatever reason? They're not doing a good job of pitching it or low investor love, whatever it is, but I think it's good for our ecosystem. Then we will actively look at investing in it to make sure it sees the light of day. But if there's a project that is getting a lot of investor love, then I don't really need to use my balance sheet because my objectives would still be achieved. Separate to that, I have a private investment vehicle called Bloxy Ventures, which is very sort of blockchain agnostic. Anything outside of Cardano is what we use that for, and that, you know, my focus has always been coming from a more venture background. my focus has always been on protocol and service level plays. I haven't really considered much on the dApp side. I don't know what you guys think about it, but do you look at, in your portfolios or in your investment theses, are you looking at protocols or service layers on top of that? Are you more focused on dApps? How do you see it playing out?
I think I can answer that. I think you mentioned Cardano. So what we did actually, one of the things we do actually in the Blockchain Center is actually advisory services as well. We are actually establishing a company within the IFC just for advisory service around the technology and the platform and things like that.
Is there a special name for that?
It's called Exilience. The company's name is Exilience, but it's blockchain technology consultancy, basically.
Exilium.
Exilience. It's like accelerating excellence. And the reason for that is a lot of financial institutions, they are looking only for the technology part. They're not interested in, investing in, for example, a certain platform like Cardano. They want to know what Cardano can do to them to improve their settlements, for example, in the Cardano case. How can they plug in Cardano into their existing ecosystems and business processes and things like that? Or is Cardano a good fit, for example? Sure. So we come in at 3 different stages. The pre-implementation, where they are trying to choose the platform. We come in during the implementation phase if they are not familiar with the technology to help them choose the right plugins and the right fit for that technology, and hand-holding them through the application or the implementation phase. And then post-implementation, who are the partners, since you created this ecosystem, who are the best partners to bring in and at what stage, and how that could be beneficial to the partner. Because like Nick's panels and the panels before us discussed, having a siloed blockchain is pointless. Having a blockchain where you bring in this level of trust, where you can plug in other people into this ecosystem and make all this seamless throughout and allow the ecosystem to grow, that's where the money is. That's where the full potential of blockchain technology is. And that's what we try to help the financial institutions to do.
On that note, we're seeing in New York and in the U.S., LPs, even pension funds calling and saying, can you, give us liquidity on our LP holdings that's locked up for another 7 years or 5 years? So that we're exploring that. But in our case, it's more private equity driven as well as buying equity. I think it's going back to equity that either has a blockchain aspect to it or equity into a company who is already trading as a cryptocurrency. It might be undervalued, or somebody needs to sell a chunk of it, and we want to come in and buy that.
Yeah, I think that's an interesting point, because I think that fractionalized ownership with easy liquidity is one of the biggest themes for investing in this space. But at the same time, does that mean that we've actually changed our mindset in terms of, when you are a venture capitalist or private equity investor, your money is going to be blocked up for the next 5, 8, 10 years if you're lucky, right, at the end of the day. 10, 15% of your investment has to return for your fund, et cetera. But what happens now when we have this tokenized ecosystem, when we can just get easy liquidity as long as it's a good market, are we then evaluating projects for their actual merit and what they can achieve and that actual growth of the project? Or are we just like, all right, how quickly can I flip this one?
We have to see
a year or two and move on.
We have to see if this comes through. ATS is in the U.S. allowing you to do secondary trading for these security tokens. Open Finance is one of them, maybe. There's maybe 6 more coming out. Before they, like Bakkt, or the New York Stock Exchange or others, will be able to take, new security tokens and list it. I think it'll be earliest 2020. Because you got to get momentum. It'll take some time for it to be tested through properly. And we don't even know if that's going to succeed. We don't know. I mean, we think it will. It should, technically. So, we've got to see where the market falls from my side.
Yeah, I think it's a good stance to wait and see for the STO market. I think because of the regulation, there's a lot of, granularity when it comes to regulations. Every country, every region, even if you look at UAE, for example, the real estate market in the UAE, each state in the UAE has its own laws, on requirements to buy land, on strata laws also for management of buildings, a lot of other overheads. And you cannot take something like Polymath or Securitize or something like this and just plug and play it here in the UAE. You have to conform to the laws. And for the case of New York, there's a lot of codes, even about buying and selling property in New York, and transfer of ownership and all this stuff. And partial ownership, there's nothing even there. But I think with people, there have to be evangelists that actually take the plunge. There have to be entities and companies and investors that are willing to take the plunge and go to the regulators and tell them. Otherwise, we'll be stuck in this forever.
I think that's a great point. I mean, one of the things that in all my regular meetings that I continue to tell them is, you have a chance right now, irrespective of the size of your economy or whatever, you actually have a chance right now to drive this new era of finance. You can drive the new regulations, and in the past, everybody sort of waits for, I don't know, the U.S. regulators, the SEC to lay down some guidelines, and then the rest of the world follows, or you're waiting for European regulators, whatever have you. In this space, every regulator out there actually has this opportunity to become the benchmark for the next phase. But are there any regulators or jurisdictions in your minds that are more proactive and have a high chance of success in this?
I know of one in Japan. So Japan with, I don't know if you're familiar with Blockchain Global. They created a project in Japan where they
so Morgo started off as a Japanese company. I've been living in Japan.
So Japan is very tough when it comes to partial ownership and that kind of stuff with laws around real estate, but they did a nice move. I don't want to talk about it in detail, but Japan is one of the cases where they have actually achieved partial ownership and tokenization of real estate.
Yeah. But I think on the security token side, they're still sort of figuring out what to do. And
but that's considered a security
that's
token.
one, yeah.
In Australia, for example, same group, Blockchain Global, they have done also tokenizing of tradable and stock exchange assets as well. And that's also the same guy, which is Sam Lee.
Well, I want to distinguish here on the real estate. You have the tokenization of the real estate, but you also have, give me Bitcoin, I'll convert it to cash, and then I'll buy the real estate. I'm going to refinance my own building, initially make it simple and stupid. Give me Bitcoin and Ether, I convert it to cash, I put it into my own building to refinance out the different holdings. That's one aspect.
Yep.
And I don't think we should overcomplicate it yet. We need to build the distribution to be able to get people activated. And that's one of the reasons we're looking at a messaging app with 200 million users that we're buying. So we can actually add that value. We're going back to your original question. Yeah. What are we doing? We're looking for equity. Can we add blockchain to it to make it more valuable? Yes. Can we do business development with everybody in the industry now to generate more revenue? We think we can.
Yeah, and I agree with you. The simpler, the better, right?
Yeah.
So very quickly from each of you, 2 or 3 investment themes that you are particularly interested in this year going forward. Ibrahim?
Yeah, so before I go, actually, I'll take a note from what you just mentioned. And I think, as I said, that it's not, I'm not going to single out any particular regulators, but as I say that, everyone has an opportunity. It's the train of innovation that's been going from different countries over the course of centuries now. And right now, the opportunity is towards the emerging countries. And, the technology itself, provides a great opportunity for economic benefit. It's up to the government or the region or the regulators to kind of like catch the train. That's one part. The other part is, of course, and I heard this, over the course of time, is that, we want to do it perfect. We want to do it right. I think, that's not necessarily the right approach because, really, success is going from failure to failure, and you got to try. If you look at the Silicon Valley structure, it's always about trying, and that's how you came up with, you did have, Yahoo. You had the case of, MySpace, but then you also had the case of Google and Apple and all the other companies that we can tell. So I think that's where the experience in the industry also comes in, is that, at first we saw, there is a huge interest driven by the crypto market, and then, you had the 2018 winter, and which made the entire industry kind of like, under the radar, and everyone's like talking about, oh, it's not real and all these things. So it's like polar opposites, and I don't necessarily agree with that, because, polar opposites are something that, we've already predicted. And it's a natural process, market going up and market going down is something that's gonna happen. And we were very comfortable with that. So we do see, like, over the course of time, that's gonna be
All
better.
right, I think we just have a few more minutes. Themes, anybody, any themes?
Themes?
In particular, investment themes over this year? Any
For
two or
me,
three that you're really interested in?
revenue generating real estate in the Middle East
Yeah.
to match what we have in New York. And then celebrity marketing. We own celebrity Hollywood companies, and we're sponsoring the Oscars and Sundance next week. So we're looking for celebrity marketing companies that we can add, potentially value add blockchain, although we already have that.
Cool. Marwan?
I think we're going to see new use cases and new industries that blockchain hasn't reached yet. With I think the theme in those would be the not normal investments. Like we can see so far we've had things like financial settlements, logistics, and that kind of stuff, and those haven't really taken off for various reasons. But I think we're going to find and we're going to discover new use cases for blockchain technology where the cost versus benefit will be much higher, but I think we haven't thought of them yet. But I think 2019 is a good time to reflect and actually discover those use cases.
Cool. Abdul Rahman?
I think in the supply chain and energy industry, it will be, in Saudi, the both ministry and Aramco, they are investing in supply chain and energy and use cases. And maybe in education, we will see something more valuable. Thank you.
We should definitely talk about both of those then, after this. Ibrahim?
I don't want to leave you on a bad note, but I do think that we're going to see more of a bear market throughout 2019, unfortunately. But I do think that the projects that are going to be created and coming out now are going to be of a much greater quality than we saw before. Although there's less money in the market, the quality of the projects will be greater throughout 2019, and I hope that that will progress throughout 2020 as well.
Okay. Do we have time for questions from the audience? No, we're done? All right. Sorry, folks, but you can catch anybody after this.